evening. Welcome to The Big Question here on NDTV Profit. I'm Vikram Oza. Our spotlight today is on falling prices. Now, inflation in India, it has dropped and it's now down to a 10-year low, which means it's just 0.25% in the month of October. That's the figure, and it's far below expectations. Now, this is an extraordinary number for a country that not too long ago was struggling with food prices spiraling out of control. So now the question is, what's really happening here? The biggest reason for this fall is this massive slide that we are seeing in food prices. Now, food makes up almost half of India's consumer price index, the CPI. And prices here have fallen by more than 5% if you look at it on a year-on-year basis. So there are several reasons for this indeed. Good monsoon rains, strong harvests, and those have led to an oversupply of vegetables and cereals. Then you have improved logistics as well. And those GST reforms, the very important GST reforms, the rates on GST were cut. And together, all of these factors have helped ease price pressures across several sectors. But from the macro perspective, if you take a look at these numbers, urban inflation has eased. It has eased to 0.88%. And also look at the corollary to this, and that is rural inflation. Now, rural inflation has actually turned negative at a negative 0.25%. Then, of course, there is, on the macro level, the core inflation, which takes out food, it takes out fuel out of the mix, and you get core inflation, which remains stable, around 4.4%. So what does that mean? It shows that the underlying price pressures, those are contained. Now, a quick dipstick survey that we did had some of us arguing that the numbers suggesting that groceries are cheaper now, living costs are lower, that's not quite the reality on ground. And even if the numbers sound like good news from an economic lens, there is the economic flip side to consider as well, which says that when prices fall too fast, consumers start waiting to buy. They're not buying immediately. They are waiting for the prices to fall even further, so they're pushing back their purchases because they're expecting things to get even cheaper. And when that happens, it means that shops, they start selling less, companies are cutting down on production, and as a consequence, you'll see jobs getting hit, wages can go lower. So in economics, we call that the deflation trap. It's a cycle that slows growth. And remember, ours is a developing economy that relies on consumption in a big way to spur growth. So though I don't want to raise any alarm bells about deflation over here, simply because we're not quite there over here, not yet at least, but we cannot ignore that the warning signs are flashing. You consider our real GDP, it gives us a sense of how much we produce. It is growing at a strong 7.8%. But the nominal GDP, which includes inflation, that's 8.8%. So that's where we're talking about a narrow gap between real GDP and nominal GDP. And that is suggesting that growth is being driven more by quantity rather than by value. And again, the problem is that it can hurt incomes, and it means it can hurt tax collections, but that can happen over a period of time. So if you put all the risks in one bucket, this is the big question that's coming up. We're asking if these falling prices are an actual relief for the Indian consumer, or is it a red flag for the Indian economy? And that's exactly what we are tackling over here. The kind of price drops that we are seeing, is this about fear? Should we fear this kind of drop in inflation? Or are we trying to cheer the fall in prices? Because it's something that we haven't seen much of before. And to tackle that, I have an excellent panel joining us. Dipali Pant Joshi, Dr. Dipali Pant Joshi is former Executive Director at the Reserve Bank of India. And there they are. Aditi Nair is also with us, Chief Economist and Head of Research at ICRA. Great to have you with us. Radhika Rao, Senior Economist and Executive Director at DBS Bank. And R.K. Vij is also with us, President of the Textile Association of India. Great to have you all with us this evening. Let me begin by asking you, Aditi, is this something we should fear? Is the fall in prices that we are seeing right now something that we need to fear, or is it something that we should cheer?
Thank you so much for inviting me to your show. So I'm just going to start off with a couple of points. I think, you made very valid points on the reasons for the low inflation, but a couple more that I want to add. Last year at this time, we had abnormally high prices of some vegetables, and food inflation was really, really very high. So it's also a base effect which is pulling down the food inflation into the negative territory right now. And that is expected to be transient. So as we move into Q4 and then into Q1, we do think that the headline CPI inflation is going to go back toward 3% in Q4 and cross 4% in Q1. These are our current estimates. So I think this is a very temporary impact that we will have of a favorable base pulling down the headline inflation numbers for a couple of more months, and then things are going to start to normalize. Secondly, as far as the lower CPI inflation coming in from the GST cuts is concerned, that's a policy change. It's not a reflection that demand is low. So I would worry about deflation when demand was low. But the GST cuts are expected to spur demand. So I think we need to see it in that context. And, I am considering that this is a transient low number. I'm cheering it for the time being. Of course, the issues on the nominal GDP growth being low this year, that creates a separate set of issues for all the indicators where nominal GDP is a denominator. For instance, things like our debt to GDP number or our fiscal deficit to GDP number, or even things like credit growth, which are a multiplier of nominal GDP, typically not real GDP. So that is a separate set of issues. But if we see it by itself, the low inflation number is coming in partly because of a very high base and a welcome policy change of the GST rationalization.
So you're cheering it, at least for the time being, and that's where you're kind of adding that it's for the time being, and we'll have to watch the trend. Radhika, would you be sanguine as Aditi is right now, looking at the way the prices are falling, because they seem to be falling really fast. And some of us are arguing that, look, this doesn't match the realities on the ground. Why is there a discrepancy in what the numbers are suggesting and what we seem to kind of deal with on a day-to-day basis when we look at our grocery bills and when we go and buy homes and cars?
Hi, thank you so much. Certainly very interesting topic. And I think in India's context, what happens is that we have, very famously dealt with 6-7% inflation. And we see a series low, and that too at about 0.3% or 0.25%. It does send a sense of, what exactly is going on. But when you see beneath the hood, I think that's where the information becomes a bit more clearer. In fact, in your own charts, you had shown food was at about 10% year on year, same time last year. With that kind of a high base, it's not surprising that we are at a 5% fall now. Past couple of months have also been seasonally weak. Usually when, especially when the rains are up and then you see a kind of a drift down, then you see a bit of a pickup at the end of the year. Again, you see a drift down in the starting of the year. So these are some seasonal movements as well, typically in food prices. So I would think it's a bit premature to talk about deflationary forces in India's context, at least. And to your question on why don't we feel it on the ground, certainly, inflation, as about most of the other indicators that we see, tends to be a year-on-year kind of, it picks up the change. It doesn't really pick up as much in terms of what it has cumulatively been for the past 4-5 years, where we have seen across the board, food and services and all of that, in fact, go up. So I guess that's one of the reasons why, statistics plays into being, and you really don't see on nominal basis what's going on the prices front. And insofar as the GST is concerned, yeah, I concur with what Aditi mentioned as well. It is a policy action. It's a one-off. Typically, any kind of stimulus that you see, by way of handouts or by way of rate cuts, tend to be disinflationary in that particular period. I would give it a month or two, and then, because this change is also a one-off, and after that, it should begin to stabilize. For the year, we have, for fiscal 26, we have a sub 2% inflation forecast at about 1.8%. But I think that's going to reverse out next year. So fiscal 27, we're talking about closer to 3.84% full year average. So what we are rejoicing now, which is very weak inflation, next year, same time, we'll be talking about slightly higher inflation because, again, we are coming off a very low base. So I would see this as, again, short-lived. And this likely is the trough in the cycle. From here on, we are expecting very gradual increases. In fact, November could be, around 0.3, 0.5% kind of number.
It's very interesting what you're saying, because right now, if you're seeing this kind of trough, and we'll have to keep watching the trend, but Dr. Dipali Joshi has been very patiently watching. She's been smiling at certain moments. Would you be as tranquil if you were at the RBI and you were watching these trends? Dr. Pan Joshi, is that something that is going through your mind? Because you seem to be quite relaxed. You don't see this as a worry area as well. Deflationary, too soon to tell, would you say?
Yes, of course. Thank you for that. And yes, I am relaxed because low inflation is good. Food prices coming down because inflation, you see, is always the tax on the poor, and particularly food prices. GST, I agree, is a one-off policy which has paid off because the festival demand has been very high. I see no signs of demand contraction, which is very healthy for the economy. But like my two other panelists, both Aditi and the other panelists, I completely agree that we will wait and watch. And that circumspection is, of course, as you very well know, part of our RBI stance. Because base effect is there, yes. It is transient, yes, of course. GST one-off, yes, but no demand contraction. So the no demand contraction lends the comfort.
Fair enough, but
So that's why
even
I'm so relaxed.
the RBI finds 4% or at least anywhere between 2 and 6% as the comfort zone for inflation. When you
Yes.
see it drop so much, wouldn't that be something that the RBI, some bells at least somewhere would start ringing?
No, because you can compute it. You can make a model. You can see why this has happened. Quite simply because of the base effect. If it's too high, then any fall seems a steep fall. What you have to really ensure is that this is a sustained process. It's not the inflation
Fair.
should fall slowly, and you should be in a regime of low and stable inflation, which will promote economic growth.
Let me...
If that does not happen, then there is a...
Yes. So
there are alarm bells clanging, not ringing.
Yes, but since you're talking about growth, let's get a sense of industry and how they're looking at it. Mr. Vij belongs to the textile industry. Mr. Vij, textiles, we closely watch them. They're linked to everyday consumption. You're talking about clothing and fabrics, exports as well. So when you see inflation drop, tell me if you're seeing your costs ease enough, at least to help margins so far, since we are talking about, base effect and how that's really playing out, or is low demand offsetting that kind of advantage that you may have had? When you're tracking industry, Aditi, how industry is going to kind of look at inflation as an opportunity, or is it going to be something that they need to be wary of? How do you think industry in India is going to watch this kind of drop? Because you talked about the base effect, you're talking about GST, which of course something that will sustain or not is still in question, whether consumption is going to, so are they going to push up capacities or not? All of that would be in consideration for industry. We're trying to get Mr. Vij back, but what's your quick take on how industry would be looking at this kind of price drop?
So lots of moving parts, I think, to your question.
Yes.
First of all, when I look at industry, what is their input cost obviously matters, and it's different across industries, right? So you've got a lot of industries which are competing with, imported items being very cheap because of the China factor, because global commodity prices have come down. So that's a completely separate story for them. And that's really playing out from the low WPI. So for the textile sector, possibly the bigger issue is going to be the tariffs. And what is the competitiveness issue, compared to all our other competing exporting nations? Overall, I mean, obviously, Mr. Vij will give you a better sense.
I just want to quickly go across to Mr. Vij and try and get him while we still have him. Mr. Vij, what do you say? Because yes, tariff concerns and all of that, but a big price drop. So is that going to help your margins or not?
No, ultimately the textile, in the textile there is a cotton and the man-made fibers. There, the two major products are there. Whenever the inflation, but rightly the inflation should be 2 to 5%. This is the right. Whenever the inflation falls down, there is a plus points also in the textile because the margins are very less. So the EBITDAs are very less in the textile. The raw material cost doesn't go high, and the labor cost also doesn't go high. The income actual income of a worker remains the same. So buying remains same. So, but
Yes, go ahead.
Down seen in textile. Then when it is continuously going down, then the buying of the fabric, which is the second imported item, because roti kapda makan is there, so the buying becomes less. then when the buying becomes less, then the production, we have to cut the production. When we cut the production, the cost of production increases, and then the expansion also decreases. But we want only that the buying should remain, but with the low inflation, the dyeing cost also remains less. And for the dyeing industry and the other industry, home textile, this increases. But we see that this is, I think, as everybody said, this is a temporary thing. And we feel that this again, the inflation will be between 2 to 5%. Then the textile will grow. And always now with the, because in the textile, Honorable Prime Minister had reduced the GST from 12-18% to 5%. And today, another a big announcement was there. The quality control orders has been removed on the man-made fibers, where so now we can import basic raw material. So I think with this, the textile will grow further in time to come.
You're thinking this is good for industry, and at least you can speak for the textile industry. But Radhika, now that we're talking about the government having cut GST rates, income taxes as well, all in a bid to boost consumption, and we've seen how the push on the production side has also come through PLI schemes. So if we have to retain our growth, if GDP has to remain over 7 and aim for 8, and we're talking about Viksit Bharat as well by 2047. So the pace of growth and the projections being made, at which state are we in managing our inflation right now? How do you think inflation needs to be managed? And RBI has a big role to play over here. But tell us where we stand in being able to control that so that we meet the kind of targets that we want to, both on the production side and on the consumption side, because so much is being made out as far as India's consumption economy is concerned. So it's got a big role to play, and inflation has that story that needs to unfold too.
Yeah, certainly. I think inflation is such a issue that too low is too bad and too high is too bad as well. So there certainly needs to be an ideal level. And I think if I were to just recall very quickly that even earlier this year, it marked the end of that 5-year when the flexible inflation targeting regime was assessment was going on, and I think it was deemed fit to maintain the kind of 2 to 6% range that RBI has, and 4% being the midpoint. So I think from a growth point of view, I think the policymakers will be focused on keeping inflation steady, keep volatility low. Low is okay. I mean, lower inflation is okay, but not too far from where the targets are. Because we should remember that the rural economy, for instance, we look at something called the terms of trade, meaning how much money are they making on their input prices and how much are they spending on the output. And when that turns to adverse, certainly rural demand, which is a very bright spot for India in the past couple of years, tends to get hurt as well. So there is a steady pace of inflation, which I guess closer to about 3 to 4% is more like it. Not good at 6 and neither good at very low levels. Coming back to your question on the kind of growth, I think for a very long time we had seen a lot of supply-driven push towards growth. Of late in this year, we are beginning to see a lot of demand side push as well. Direct tax changes, now the indirect tax relief, which is a lot more, it tends to reach a lot more people than what the direct income tax does. Then you've got government that could not participate in the capex cycle last year because of elections. They have come back. Capex spending for the center is going on about 40-45% in the first few months of the year. So that is falling into place. The central bank has cut rates. More is expected, liquidity in surplus, and regulatory reform as well going on. So certainly a lot of pieces falling into place. I think this year we're going to see a blockbuster number. I think growth is going to be upwards of 7%. In fact, our own forecast is of 7.2%, partly because of how inflation is doing.
Yes.
But I think a more stable state would be around 6.5 to 6.7%. That's what we would think.
So you're saying 6.5 to 7 is more realistic on the growth front, on GDP front. Dr. Pan Joshi, again, as far as the RBI is concerned right now, where would the RBI like to see inflation to be able to reach the targets that are being set? Right now, if you're looking at immediate moves, because the question is, should the RBI stay put or should it cut rates? The expectation from what Radhika is saying that there will be further moves on the cutting cycle. Do you think that is what is needed, or do we need to stay put right now? Which way do you think the RBI is going?
I think 0.25% of a rate cut would be a reasonable number to keep the optimism high and to spur growth expectations further. And I do feel that 4% is what RBI generally is looking at, shouldn't exceed that. What is important is not just low inflation, but low and stable inflation. Because when you have stable inflation, say if you are like Mr. Vij, if you're in a manufacturing industry, then you can plan your output and you can really look at it properly. And if you're looking at the export sector, again you have a favorable business environment, there is stability, and if you're if you're exporting, as textiles a major part of exports, so when your inflation is lower than that of your trading partners, your goods and services will definitely become more competitive, so in the international market, and they will boost your export volumes. So I think RBI will give 0.25% of a rate cut. Now, low food prices, of course, hit rural demand, especially in the FMCG sector, which gets dampened.
Yeah.
Because if the food prices are very low, though it's good for poor people, as I said in the very beginning, the farmer income gets squeezed. So agri-business margins, as Radhika pointed out, also get squeezed. And if imports are part of the inputs, then it becomes even more dicier.
Sure.
But it's all in all, it's a good thing if you have low and stable. The
So-
key word here is stable inflation.
So stable inflation and then stable rates as well. Is that something that Aditi...
Sorry, stable?
Stable rates as well, interest rates also, so that,
Yeah,
like
of
you
course, of
mentioned,
course, of
the
course.
industry needs to kind of plan that much better. And Mr. Vij, perhaps I'll come to you on that. But Aditi, when you talk about what the RBI should be thinking right now, because when you're seeing this kind of price drop, yes, you're saying it could be a temporary phenomenon that we are seeing, and we'll wait for that stabilization to happen. But to kind of keep the momentum of growth unchanged and perhaps spur it even further, is there a signaling that the RBI needs to do more than actual moves to spur growth? And perhaps at this level of inflation, they need to be wary of too many rate cuts too soon. Is that a risk?
So let me give you a couple of numbers. Now, we can look at inflation in a slightly different way. Instead of looking at it in a YOY sense, since we know we have a very high base from last year, let's look at what the average, 2-year average inflation is in October 2025 versus October 2023. And that's around 3%. The second statistic which I'm going to give you is if we simply remove vegetables from the equation, the rest of the CPI is YOY higher by 3% over last year. So it's vegetables which are totally distorting your inflation number for October. And we know that there are supply side issues which dominate vegetable prices and their volatility. So let's just set that apart. Now, if I look at the average CPI inflation for FY26, the number is just around 2%. That's where I expect it to be. So on average, this year is going to be at the lower end of the 2 to 6% band that the MPC has. The average is not unlikely to fall below that band. And if it does, it will probably be only minorly. My sense is that 25 basis points, the rate cut may be adequate in December, especially because we still expect the next GDP print that we'll get just a few days before the MPC meets to still be around 7%. So it's like, inflation, YOY sense is very low. That's temporary. It's partly because of a base effect, partly because of a policy change. And growth is still holding up pretty well at 7% or thereabouts in Q2. So I don't think more than a 25 basis points rate cut would be warranted at this point in time. The RBI has focused a lot on the forward-looking inflation, which we expect will go past 4% sometime in the first quarter of next fiscal year. So there's no point of cutting too much now and then having to reverse too quickly later.
So, Mr. Vij, now that we are talking about interest rate cuts for industries like textiles, what's that one policy move that can help you keep growth steady, even if inflation stays low? And we don't know whether that's going to happen or not, but of course, one can hope. Is it rate cuts? Is it tweaks in taxation? Is it export support? Because lately the government has extended, and only yesterday we had the announcement come through about the support on the export side. Which would you bank on more for further growth of industry and for higher production?
No, that ultimately for the textile, because the textile is a job oriented. If I'll put one knitting machine, it gives jobs to the 4 person, and the small unit of knitting machine should be of 500 to 600 people. So my point is that whenever the cloth will be cheaper, then the buying will be more, because the higher brands, HM and their brand, they are selling at 3,000, 4,000 rupees. But now, as the textile ministry, Honorable Prime Minister has set the target of $350 billion of the textile total trade, $250 billion for the domestic and 100 for the export, that we have to achieve by 2030. I'll see the export of textile will grow. That, of course, for this last 3 months due to USA, the export was hit. But I hope that this November, everything will be settled and our export, whenever the rupee becomes stronger, then export always increase, and textile, we are going to increase our export. And but only thing is that too much changes in the interest rate, because we have to plan 3-year plan earlier.
Correct.
It takes 2 to 3 years. So that interest rate for a unit should not be more than 6% or 5 to 6%.
Yes, indeed. So, I mean, it's very important that, for industry to plan, even the markets for that matter, we hate the uncertainties, right? And at this time, when you're looking at inflation drop so much, which is why the question came up, like, should we be worried right now? Because we don't want too much to change too quickly. And there are so many global headwinds that we are dealing with right now, which creates the doubts and the questions. But it's great that you have experts like you and representatives of industry who clear the air and clear the clouds over the questions that we seem to come up with every day here on NDTV Profit. It's a pleasure getting your perspective, Aditi, Dr. Dipali Pant Joshi, Mr. Vij, Radhika Rao. Such a pleasure having you with us on this edition of The Big Question here on NDTV Profit. And yes, indeed, falling prices, they bring comfort, but they also bring caution. The question is whether India has found that perfect balance between price stability and growth, or if this record low inflation is that calm before a slowdown. That's been the big question tonight. And indeed, we are going to keep raising the question on prices, the questions on economy, all of those on The Big Question here on NDTV Profit. I'm Vikram Oza from me and the team. Thank you so much for joining us.